Hey, welcome back to Two Big Guys Try Stocks. I'm Dylan.
Vinny?
And Michael Burry made some very interesting position changes. We're going to look at one that I actually think could be a decent long. I've never looked at it before, but it's actually kind of interesting. He dropped in how he's doing on his shorts, which previously when he was a hedge fund manager, we didn't really get to know because there's rules about that. I have to come on 13Fs, but then it's options. So you really know what happens. So he actually said what's happening. So it's pretty cool. We're gonna take a look here. He also prefaces it with "No one should ever short." It's kind of funny. No one should ever short, but I have to. This is his direct quote because of his. He's going with his analysis. So
I like
first,
it.
let's just get some longs that he changed. So he increased a small stake in Birkenstock to a 5.2% position as the stock fell to $35. So that's about down here. Do you wear Birkenstocks?
No, like is that like the hippie shoe company?
It's no, they're not hip. Well, maybe actually. Now that I think of it, I mean, I think that there's other different Herpken. I don't know.
Yeah.
They're like really hard sandals that actually are kind of comfortable, but they don't look comfortable.
Yeah, got him.
I don't know enough about them. I did think it was interesting. This was a real interesting one. This and the next one.
Gotta go back.
I took a new long full position. Now his definition of full position is usually between 5 to 10%. Okay, so his starting anew is usually under five. So he just has these definitions that he goes by, but between 5 and 10% is what we can assume. In Build a Bear Workshop, in the upper mid 30s, that thing that's always in the mall, which
Hmm.
I feel like when I was in like seventh grade, that was like always the go-to present for like buying like a girlfriend or something when you're in middle school. That was it.
Yeah.
Yeah, they I did not realize that they were chilling at like $75 in January, but they definitely took a pretty massive hit.
Hmm.
Looks like he just entered. So this would be something to look at to see if it suits. Frankly, I'm not a huge fan on buying stuff under the 200-day moving average, which is this blue line here,
Oh,
because there's too many times where it can just take multiple legs lower. Yes, if you time it perfectly, which I mean, that's a lot of ifs, then yes,
yeah.
you would make more money. But you can also just like wait till it recovers it and forms a base. A little bit safer.
I just want to know
Um,
what he means when he says yet misunderstood business. I really want him to elaborate that on that. How's it misunderstood?
yeah, well, because they just sell bears. I don't know. Speaking of, I don't know. Bought the Pink Sheets TPLWF listing of Temple and Webster in the low $3 the last few days. This is a large position. I believe it's 9%. I have this in a later slide. So he went ham on this
What is it?
Pink Sheet stock. This was probably one of the more ballsier plays I've seen him do because
Okay.
these companies are terrifying in my humble opinion. Again, I don't know enough about this one, but I would never buy it. I don't even have the ability to look at it in Robinhood. So yeah, this was interesting. It's more the position sizing that's pretty crazy, which I'm going to show you. I have the position sizing of all of the stocks. So this is the most interesting one to me. So like, do you guys have Sprouts?
No, I've heard of him, but I've never been to
Okay.
one.
So like my wife goes there constantly. It's like it's like Target, right? Well, it's not. It's like Target for nice food.
Hmm.
Um, so he added Sprouts Farmers Market in the high 70s, taking it to a full 5.2% position. Private equity has been sniffing around this one. The story is relatively simple, and the current valuation is not likely to hang around for too long. Now, as I said earlier, I do not like buying stocks under the 200 moving average. The reason being, here's your 200 daily moving average. Let's say you bought here when it hesitated. You're like, hey, heck yes, time for the turnaround. You're going to be real upset on the way down here. Or, hey, we had a little bit of an upswing. Oh, dear God. Right. But once this catches up and you have almost a base forming, this is where I get the most interested in taking a long position. I will
Right.
be doing a video on this next week on if I'm going to take a long position on this one. This is exactly the kind that I like. For me, I just buying under the 200 moving averages, it just seems like a gamble. I know all this is a little bit gambling because you can never
Mhm.
know, but it just seems like a stupid gamble because there's nothing to prop. All right.
Yeah.
Um, his total longs. Now there's more than just this, but Temple Webster 9%, Vive 4.8%. He did announce he sold some shares. He is not planning decreasing further. Mercado Libre 12%, PayPal 4% after selling more shares. Molina Healthcare 9%. Lululemon is his largest long position.
Yoga pants. That's all I
And
can
I
say.
actually don't want to touch this one. I know I see his thesis on it. I disagree with it a little bit.
Hmm.
Um, he literally said, and I quote, "I don't see Viore, which is a very big upcoming brand, as taking any clients away from Lululemon." I cannot tell you. It's directly taking clients. That's who they're taking clients from. So I don't like all of my friend. That's where they were Lululemon, and then it's Viore instead. It's just better. So I don't get that argument. I'm gonna step out. I don't know enough about it, but that one argument did not make any sense to me.
Interesting.
Yeah. Also, the fact that Costco was able to literally copy them and sell it for like $8 a pair, I don't like that at all. I don't
Huh.
want to touch this.
Yeah.
I know they were sued for it, but
Yeah.
I don't know how that's gonna go. I don't know. Sprouts 5%. I'm gonna pronounce this wrong. Zodis unknown, but add in the 70s. Now his total list of longs, I didn't want to list the percentages for some of these other ones like Baba or JD because the price has changed from when he last, like when he said Baba was, I don't know, 7% or whatever it was, that was at a certain price. So I have no idea what it is now.
Yeah. Well, he
Um,
doesn't own any Baba now anymore. I think he did we call it gain lost harvest and switched into JD, if I'm not mistaken. Tax loss harvest.
yes. Yeah. Yeah. He did a tax loss harvesting for JD, which ended up being a bad call because if you look at when he did that JD versus Bob, it did not go well. But correct. So JD, it's higher, but I have no idea. So here you have these are all from Fannie Mae to Molina, minimum 5%, and then from down here, Sprouts, Tencent, these Chinese companies are under 5%. All right. With the exception of PayPal, he just changed to 4% because he took some stuff, and then Lululemon, obviously that's his biggest one. But let's talk about his shorts. So he is significantly short. Total shorts, not including puts, are a little over 21% of his portfolio.
Wow.
His puts are 6.5%. So that puts him at 27.5% of his portfolio is
Fair.
puts. Okay.
Yeah.
He shorted more stocks and added to his PLTR short. And then he added a short to CoreWeave and he increased the size of Micron. There's a caveat here, which I'm going to talk about. So, yeah, his puts are at 6.5% of his portfolio. They're spanning NVIDIA, Palantir, the Qs. He rolled them over, so they're all expiring in 2027 with the exception of Palantir, but he's already taken a decent amount of profit from that one. He's a little bit over margin than he usually does. So I'm now at mid to high teens percent margin, function of large short positions, given some leeway for larger long book. I'm going to try to bring that back down to 0 to 10%. And then the same warning I repeat about short selling also applies to margin. As a hedge fund manager for most of the last 26 years, I work with margin and short sales very naturally, and I know what my risks are. He puts this caveat: the vast majority of people should never short, and likewise should never be on margin. Highly agree. I'll like puts and shorting are different. Shorting seems I will never touch it because you could technically lose unlimited amount of money. And then margin, I made that mistake 2022. That's how you learn. That's how you learn, baby. Um, yeah. So he always has this thing in here, which I think is pretty funny. As I mentioned, I would never recommend my kids use margin, short stocks, or become hedge fund managers. Now,
He's not
what
wrong.
happened August 13th? Okay. Let me move my face. He actually ended his Tesla and his AMAT short for a gain. Um, this is his note, and this is where we find out about how he's doing. So today is a day that happens on occasion in the life of someone who sells short. I am now at a place where roughly overall, I have been roughly break even on my shorts. That's with his PLTR short making massive amounts of cash, right? he showed a PLTR when it was crazy high, and it has down at least 50% from where he was holding. So he's roughly break even, but the situation is starting to tip into the loss position. So he's choosing to this is of August 13th, degrow certain parts. So he sold his puts on socks, and then this week, so this was August 13th. On August 21st, he then shorted just shares. He's just shorting the stock. So he's just not doing puts. So it's the
Mhm.
same analysis. He's just changing the vehicle, if you will. The implied volatility stayed stubbornly high, protecting the value to an extent thus far. But on a further rally, I imagine I would get doubly burned by lower implied vol as well as adverse price action in the underlying. So
Mm.
it is interesting that it seemed like he had really made a shit ton of money based off of his PLTR short. His Tesla short was very successful, but he's actually break even just because he's just probably just hemorrhaging theta
Yeah.
on Nvidia and a couple others. The theta decay is literally crossed out those gains, and I have to assume the PLTR gains were massive because he shorted almost perfectly.
Yeah.
So it
It's one of
is it's
let's say it's
interesting.
one yeah, it's one of the tough things with options is you can be completely right in your analysis of a company, the direction of the movement, the magnitude of the movement, but you may be completely wrong in the timing of the movement, and that may be all that mattered.
Yeah.
Like, it's tough. That's why playing with options is challenging for sure.
Yeah, and that's why I don't like just naked shorting like he does. It's just balls of steel. I don't. That's scary. I don't like
Yeah,
that at all. Um, all right, let me know what you guys think. I am gonna take a look at Sprouts because Sprouts is more a business I'm familiar with, and more importantly on the chart where I would look at buying it. So,
cool. Yeah,
all right, guys.
catch you next one.